Hey guys, back again with another trade review for this week. We have a bull domination trade similar to last week, but with a little bit different setup this time. I was aggressive coming into this morning when the trade took place, looking for the 4-hour higher low to be set, to get some daily bounce follow through after a support of a defensive, really key support yesterday by the bulls. About 15 minutes into the open, we saw some weakening of some really key signals, which I will review towards the end of the review. Which I think is really important on refining these trade entries going forward, and also the opportunity to flip the position and look short when we see that softening a little bit into the open. So without further ado, let's jump into it. Hey guys, how's it going? It is May 20th, and this is my trade review for today. I had 3 trades today for a small loss. I think it was about 60% of a day loser. But I had some really good lessons learned that I'd like to overview in this video and to kind of share with the rest of the people in the trading community. So into this morning, these are the SPY and NASDAQ futures that I have on the top of these panels. This morning, we saw this overnight action, this 4-hour stair step into this white line of previous support that we would suspect to be now resistance. We saw an initial rejection into the morning and starting to see some consolidation. So I was looking for a bounce on the daily when we were still holding the support yesterday. And I thought, okay, well, the best setup for bulls is going to be a quick 4-hour higher low on some initial 4-hour consolidation. And then we're going to want to break the high of day from yesterday, the higher day prior marked in blue, as well as the overnight high marked in orange, followed by that white line of resistance, both in SPY as well as NASDAQ futures. So on the open, my game plan was to not look short, was in fact to look long as soon as we started to see consolidation below the previous 4-hour candle. And this is in part one of my errors and something I'll overview in the lessons learned. So this is my game plan into the open. Now let's kind of go into my execution. On Tqqq, I had 3 different entry points in order to look long. This is, I'll focus on this panel down below. Why don't we go full screen just for clarity. So I have the different entry targets, or entry points rather, marked out in yellow, but let's go through them. So on the first sell-off, we had a sell-off and a V-shape to new high a day, rejection. This would have been a great top fish in hindsight. Then on consolidation, we were looking for a 2-minute and 5-minute higher low versus this low of the day here. If this was going to be the first 4-hour or the initial 4-hour consolidation, this would be the most bullish scenario. And internals were initially looking bullish, and I convinced myself that this would be what I call a bull domination day, and I'll get to that closer to the end of the trade review here. So on the 2-minute, 5-minute higher low, I had a couple scales versus this low of the day stop. I risked about 1/3 of a day loser. On the initial bounce, I could sell partial of that position. I re-added on the 2-minute higher low versus this low of the pullback, and then sold another chunk on the failure for the 2-minute trend change. We then saw a consolidation and a pullback to new low of the day. I had since moved up my stop as well as managed my position quite well. So even though this was risking about 1/3 of the day loser, I had only about half of that in actual realized loss on that trade. So seeing some further consolidation on the markets, still selling off. We looked like we were forming a 2-minute descending wedge as bears weren't seeing much follow through. Let me draw this out here. So with bears not getting too much follow through, I thought, okay, well, this is another option for bulls to in fact set that 4-hour higher low that we're scouting. I missed the initial entry, so I had the same approach as with this last play. Grabbed, I think I only grabbed 1 or 2 scales versus low of the day because a little bit more risk in this size of an entry. Again, selling off partial, moving my stop up to this level, and again getting stopped out. At this point, I was at I think a bit more of a loss at about it was just under a half-day loser for my second attempt. Now, for my final attempt, after we saw this 2-minute descending wedge, failure to break with the bear break, that should have been my first indication that bears are sort of a lot stronger than I'm giving them credit for. But I decided to try it one more time at the overnight, or not the overnight low, the low of day prior. This is one of my playbook trades, and usually a really key reactive level. We did in fact see some stalling at this level. I was able to get 2 scales versus this low with really no bounce opportunity to sell part of that position. So I had a pure stop out on that trade. Because it was smaller and because the entries were conservative, it was a very small risk, but still with the 2 prior risks, this added to the overall losses on the day, netting around that 60% of a day loser. At that point, 60% of a day loser on a Friday when it's already been a difficult week, I decided to close up shop and to stop trading. But in reflection, I think there's some really key lessons to be learned from this that I'd like to overview now. So I'll go into that kind of as the second part of this trade review. So let's go into the internals for this day, which kind of had me stuck to only looking on the bull side without giving much potential to bears for a deeper than what we would like 4-hour higher low on those NASDAQ futures. So into the open, I was observing this internals panel that I have set up, usually on a different monitor, so I can look at everything at once. So we were looking at add and add Q, as well as with the breadth of the market. So the overall volume for bulls minus, I think it's bulls minus bears is how it's calculated, as well as UVXY. This is key. We'll get to this in a second. So on the open, first what caught my eye is add and add Q were extremely elevated, reflective of that higher open that we saw in the markets with the 4-hour stair-step pattern from low of day yesterday. So we had plus 2,000 on ADQ, and we had around 2,000 on AD for NYSE, and this is for NASDAQ. Usually, when the AD and ADQ open around or above 2,000s, this is a potential for a bull domination day. If the AD or ADQ can be pinned at 2,000, or really it's above 1,800 is the level we look for, all day, especially all morning, we look for a potential bull trending day. Here, within the first 15 minutes, we saw immediate softening in the AD and ADQ, showing some of that bull pressure that was coming in and was starting to build. This should have been my first red flag that this wasn't a bull dominance day, and to not expect an immediate 4-hour higher low, and to being, that aggressive first wick entry when the stair-step pattern on the 4-hour was in fact broken. And instead, we would like to see for the first 15 minutes for the AD and ADQ to be pinned around that 1,800, 2,000 mark instead of selling off as we saw here. The second factor was on the breadth. Here we had the overall breadth for NASDAQ on the top and NYSE on the bottom, open quite high. This is the open of the day. So we had a 2-to-1 ratio on NASDAQ and a 4-to-1 ratio on NYSE markets. This is good, but this is not nearly as strong as what we'd like to see. We would like to see at least a 3-to-1, if not better, to see full bull domination. And we can look to a prior day, if we go back to the 13th, for how this should look. This is a bull domination day. If you look at how we open, right at 6:30, we open, 2 or 1-to-1, 2-to-1 on both markets, and then within the first 5-10 minutes, we see that spike up to 11-to-1, 6-to-1 for a bull to bear ratio. So really, really strong bull momentum. If we go back here to the 13th on ADQ, for time's sake, I won't go to AD, but it was the same look. You see that ADQ here is pinned. First 15 minutes, it's holding the 1,800, 2,000 above that level quite significantly here. So that should have given me the first indication that today is not the bull dominance day, and instead to be more open-minded for a deeper than expected bear consolidation. The third and final item that I'll highlight is UVXY. UVXY is that counter trend signal that we can usually use to either hedge or to give us additional confidence into our trade setups. What we saw here was we saw a descending wedge. I think it's a bit more clear in the 1 minute. Let's go there. We saw this descending wedge on the 1 minute on the initial bull attempt, showing that we weren't really seeing any follow through. And this turned out to be that 5 or 15 minute bear flag on Tqqq that we were trying to, that was our first trade entry of the morning that we were trying to massage an entry and get long. And we were observing this. We were seeing that we weren't really seeing any follow through for bears on UVXY, and we would need to see this either break out and fake out and go lower, or initially just go lower straight shot for bulls to really get any follow through on that attempted 4-hour higher low. If we go further into the morning, it was in here and it was on the 3-minute. We saw another triangle forming in here. Let's go ahead and just try it on the 2-minute to see if it's even more clear. But there was another, there was another wedge in here. I believe it was in here or up here, where we saw additional consolidation in price with really no bear follow through. It was this really bear break, no follow through. That just turned out to be a 15-minute bull flag for bears, so 15-minute bear flag. This was another reason to not be super aggressive on our entry. So overall, I'm not too fussed on the day because it was a controlled day with 3 trades, 3 losses, though under a day maker or day loser, really 60% of a day loser, as well as some really clear signals that I think I can use moving forward to give a better trade plan set up for this type of days. So if you have any questions or comments below on these setups or my execution of them, feel free to drop it in the comment section below. Otherwise, I'll catch you on the next trade. Thanks so much. So in review, it was a 0.6 of a day loser, which is a small mid-sized loser. But at the end of the day, I'm really happy with my aggressive execution and my observation of this additional piece of information of how the internals were softening and really weren't the optimal setup for this type of trade setup, the bull domination trade to begin with. So now going forward, I have a little bit clearer of a lens on exactly how I want to focus in on these trades and when I can consider the trade invalidated. So I think there's a really good opportunity to also use UVXY as a hedging vehicle, especially with the descending wedge and further proceeding wedge that we saw a few minutes later, as a good opportunity to also scalp long using that trading vehicle. Looking forward to adding that to my my playbook and my game plans going forward. So catch you guys next week and have a good weekend. All right, see ya.